The year is 2025, and the world is witnessing something unprecedented, a gold rush like we've never seen before. But this time, it's not miners with pickaxes racing to California, it's central banks, billionaires, and entire nations scrambling to accumulate as much gold as possible before it's too late. In just the first quarter of 2025, over 1,200 tons of gold changed hands globally. That's more than the entire annual production of some countries. And the question everyone is asking is why now? What do they know that we don't? The answer might shock you because what's happening right now could reshape the entire global financial system within the next 12 months. And if you're not paying attention, you could lose everything you've worked for your entire life. If you want to understand where your money is headed and how to protect your wealth, hit that subscribe button right now. Drop a comment below telling me what you think about this gold rush, because what I'm about to reveal could change everything you thought you knew about the global economy. And trust me, the mainstream media isn't telling you the full story. China just made a move that sent shockwaves through financial markets worldwide. In the last 6 months alone, the People's Bank of China added 225 tons of gold to its reserves. That's the fastest accumulation rate in modern history. But here's what's really interesting. They're not just buying gold, they're actively encouraging Chinese citizens to convert their savings into physical gold, offering tax incentives and even setting up gold savings accounts at major banks. Walk into any major Chinese city today and you'll see gold vending machines on street corners, billboards advertising gold investment products, and banks offering zero-fee gold storage services. This is a coordinated national strategy, and it's happening at breakneck speed. Beijing isn't just preparing for economic uncertainty, they're preparing to challenge the dollar's global dominance. The numbers tell an even more compelling story. Chinese households now hold an estimated 4,500 tons of gold in private hands. That's more than the official reserves of most countries, and this accumulation accelerated dramatically in the past year. Chinese retail investors bought over 300 tons of gold bars and coins in 2024 alone, a 40% increase from the previous year, and jewelry demand remains consistently strong despite rising prices. This isn't speculation, this is systematic wealth preservation on a national scale. Russia followed suit immediately, increasing their gold reserves by 180 tons, while simultaneously reducing their dollar holdings to historic lows. But they didn't stop there. Moscow announced they'll accept gold as payment for oil and natural gas exports, effectively creating a parallel commodity-backed trading system that bypasses the dollar entirely. Iran, Saudi Arabia, and several African nations have already expressed interest in joining this arrangement, and when you see this kind of coordination among nations that control massive natural resources, you know the game is changing fundamentally. The petrodollar system that has dominated global trade since the 1970s is being dismantled piece by piece. India jumped into the race as well. The Reserve Bank of India purchased 200 tons of gold over the past year, bringing their total reserves to over 800 tons. Turkey added another 150 tons, Poland increased holdings by 100 tons, and even smaller nations like Singapore and Thailand are accumulating gold at unprecedented rates. This isn't random, this is coordinated de-dollarization, and the implications are staggering for anyone holding significant dollar-denominated assets. The Federal Reserve is trapped in an impossible situation. Inflation remains stubbornly high despite aggressive interest rate policies. The national debt just crossed $36 trillion with no signs of slowing down, and foreign nations are losing confidence in the dollar's stability, especially after recent banking crises and political instability. Jerome Powell can raise rates and destroy the economy, or lower them and watch inflation spiral out of control. There's no good option left, and the world's central bankers know it. They're voting with their gold purchases. When trust in fiat currency erodes, gold becomes the universal safe haven, the asset that has maintained value for over 5,000 years of human civilization, and right now we're seeing that shift happen in real time at a pace that should terrify anyone holding significant dollar-denominated assets or traditional retirement accounts. The velocity of money is declining, credit markets are showing signs of stress, commercial real estate is collapsing in major cities, and regional banks are still dealing with massive unrealized losses on their bond portfolios. These aren't isolated problems, they're symptoms of a system reaching its breaking point. The derivative markets, worth over $600 trillion in notional value, represent a ticking time bomb that could detonate at any moment. And when it does, gold will be the only asset standing. But here's what most people miss. This isn't just about protecting wealth. It's about the transition to a new monetary system. Several countries are already discussing gold-backed digital currencies. The BRICS nations are developing a commodity-backed trade currency with gold as the primary anchor, representing over 40% of the world's population and 35% of global GDP, and the International Monetary Fund is quietly revising its special drawing rights framework to include larger gold components. Behind closed doors at the last G20 summit, finance ministers spent unprecedented time discussing alternatives to dollar dominance. These aren't conspiracy theories, these are documented meetings with published agendas. The writing is on the wall for anyone willing to read it. History shows us that major monetary resets happen approximately every 50 years. The last one was in 1971 when Nixon ended the gold standard and ushered in the pure fiat currency era. We're now 54 years past that moment, and all the signs point to another massive shift happening very soon. Before the 1971 reset, gold was trading at $35 per ounce. Today it's over $2,000, but that's still measured in dollars. What happens when the dollar itself is no longer the measuring stick? When gold becomes the baseline for a new global reserve currency system, those who position themselves early will see generational wealth creation, while those who waited will watch their savings evaporate in real time. The smart money isn't waiting to see what happens, they're positioning themselves right now. Pension funds are allocating up to 15% of their portfolios to gold. Billionaires like Ray Dalio, Stanley Druckenmiller, and Paul Tudor Jones are publicly advocating for significant gold ownership. Even retail investors are buying gold bars and coins at unprecedented rates, causing supply shortages at major dealers worldwide. The premiums on physical gold are reaching levels not seen since the 2008 financial crisis. That's not just demand, that's panic buying from people who understand what's coming. Some dealers are reporting wait times of 6 to 8 weeks for delivery of standard gold products. Mining companies can't keep up with demand. Global gold production has plateaued around 3,000 tons per year, but annual demand now exceeds 4,500 tons. That deficit has to come from somewhere. And it's coming from weak hands selling to strong hands, from retail investors who don't understand the big picture to institutions and sovereign nations who do. The gold mining stocks are starting to reflect this reality, with major producers seeing their valuations surge as investors recognize the structural supply shortage developing. And if you want to stay ahead of this curve, make sure you're subscribed to this channel, share this video with anyone who cares about their financial future. Because what happens next in 2025 will determine winners and losers for the next generation. The gold rush of 2025 isn't just history repeating itself, it's history accelerating, and you need to be ready, the clock is ticking, and the window to position yourself is closing faster than most people realize. Don't be the person looking back wishing they had acted when the signs were so obvious.